Palantir stock is crashing, and if you bought the hype, you're likely frustrated right now. But don't panic. In the next few minutes, I'll share 3 crucial steps to protect your investment and reveal what is going on with Palantir stock. The last time I talked about Palantir on the channel was all the way back in January, just before they released earnings and just before the stock nearly doubled to $125. I was incredibly bullish back then, but am I as bullish today? Let's find out. But before we get into the video, if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get 1,000 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. So what is Palantir Technologies? Palantir is a software company that builds the world's leading platforms for data-driven operations and decision-making. Palantir specializes in data analytics. Its software lets businesses capture and integrate data, develop and manage AI and machine learning models, and build applications that incorporate those data sets and models. These applications help workers make better decisions, and Palantir develop long-term partnerships with organizations working together to help them realize the value in their data and transform how they operate. The company provides solutions for many industries, such as automotive, cyber, financial compliance, law enforcement, and defense forces, among others. It serves various private enterprises, public institutions, and non-profit organizations. Palantir is a fully global company and has operations in North America, Europe, Asia, and the Middle East, but Palantir is headquartered in the US. So that's a very simple breakdown of what Palantir is and what they do. Now, Palantir recently debuted a new product called AIP, or Artificial Intelligence Platform, which brings support for large language models and generative AI to its existing software. With industry analysts having praised Palantir for its technology developments, ranking Palantir as a leader in the artificial intelligence and machine learning and data science market in many reports over the past 2 years. Looking at the recent investors' presentation, Palantir reported encouraging financial results in Q4. Palantir beat analyst estimates with very encouraging results, and the stock went insane after the earnings report. In fact, looking back, PLTR stock went up about 50%, but then everything started to fall apart. So let's take a look at this to see why the stock went up and then figure out what has gone wrong to cause such a massive drop. US commercial revenue grew 64% year over year and total revenue grew 52%, but only 12% from the previous quarter. US government revenue also grew by 45% year over year, with the average existing customer spending more. In turn, revenue increased 36% to $828 million, and Palantir recorded an adjusted EPS of 14 cents. Palantir also recorded adjusted free cash flow of $517 million. US commercial, or DV, grew 99% to $1.79 billion, and the company closed a record-setting $803 million of commercial total contract value, which is an increase of 134% year over year, as well as maintaining a very strong Rule of 40 score, which is a very important metric for software as a service companies. For the full year, Palantir's revenue grew up to $2.8 billion, with an adjusted EPS of 41 cents and $5.2 billion in cash. So all of these are very impressive numbers. In November, Palantir announced its first warp speed cohort, comprised of companies committed to reindustrializing America's manufacturing and production capabilities through advanced AI and technology. The inaugural members include Anduril Industries, L3Harris, Panasonic Energy of North America, and Shield AI. Palantir extended its long-standing Army Vantage partnership for up to 4 years. Now, this is a major deal. The total value of this agreement is $400 million for a period of up to 4 years, with a total available ceiling of over $618 million. Also in Q4, Palantir received FedRAMP high authorization for their federal cloud service and supporting services. While in terms of commercial customers, Palantir's collaboration with Cleveland Clinic, where they use AIP to streamline operations, setting the standard for being the best run hospital in the world, And Rio Tinto rail operators will use Foundry and AIP to orchestrate and optimize train routes and maintenance needs for dozens of unmanned trains running 24/7. Now, importantly, Palantir recorded yet another consecutive quarter of GAAP operating profitability and GAAP net income, and this was despite a one-time SAR-related expense in Q4 2024. So as we can see here, this would have been far higher when excluding the one-time SAR payment. For a lot of reasons, Q4 2024 was by far Palantir's best quarter to date. They have increased their income. They have increased their customer count. And this is for both government and commercial in the US and abroad. Palantir signed 129 new deals of at least 1 million or more, and they have ended the quarter in a better position than ever before with no debt and $5.2 billion in cash and cash equivalents. But 2024 was a pivotal year for Palantir for far more than just its financial metrics. Palantir was admitted to the S&P 500 in September 2024, and this is something that I was talking about for months, but it came as a shock to a lot of people. Now, for 2025 guidance, Palantir expects revenue of about $3.75 billion. They expect growth of at least 54% in US commercial revenue, approximately $1.55 billion in adjusted income, and between $1.5 to $1.7 billion in adjusted free cash flow. Now, this would be very good increases over 2024 figures, but is this enough to justify Palantir's current price? Even after Palantir stock having dropped about 35% since its all-time high set in February, well, according to Wedbush analyst Dan Ives, Palantir could be a $1 trillion market cap over the coming years and shaping up to be the next Oracle or Salesforce as the AI revolution plays out. Now, Palantir shares have taken a beating after the US Defense Secretary ordered Pentagon officials to develop a new budget that would cut defense spending by 8% annually. And given Palantir's reliance on government contracts, this spending retractment emerged as a negative catalyst for the stock. But despite this, Wedbush analysts told clients Monday that they expect Palantir's AIP and the Trump administration's focus on efficiency could leave the company in a sweet spot to benefit from a tidal wave of federal spending on AI, even as other government contractors face spending cuts. We believe Palantir could actually gain more deals and IT budget dollars across various government agencies. Wedbush maintained an outperform rating and a $120 price target for the stock, which is over 40% premium to Monday's close at $83 and today's close at $84. And most other analysts have also given the stock recent price targets in excess of $100. The other major negative for Palantir in the past week has been that Alex Karp's plans to sell 10 million shares. Karp recently adopted a 10b5-1 trading plan for the maximum sale of 9.975 million shares of common stock. The trading arrangement will last until September 12, 2025. Now, I have talked about Palantir's CEO and other insiders selling stock before, and this is not something that actually concerns me. If we look here, we can see that Alex Karp has been selling stock on a near monthly basis since the company went public over 4 years ago. This is nothing new and nothing that concerns me. In fact, he had about 8 million shares left under his previous plan, so this 10b5-1 is only about a 25% increase. So now the question is it time to sell Palantir stock too, or time to buy the dip? Now, although Pentagon budget cuts have been viewed badly by investors, the new vision by Defense Secretary Hegseth could be a game changer for Palantir stock. There are some other major changes going on in the Pentagon, but the ongoing sell-off could be an opportunity to buy the dip in one of the highest profile growth stocks leading the artificial intelligence revolution. As it says here, Palantir develops a suite of AI software platforms called Gotham, Apollo, and Foundry. As we know, the company sells its products to both private and public sectors. However, as it stands today, more than 50% of Palantir's business comes from the government, particularly the US military and other defense agencies. So this is very interesting. Hegseth just dropped some interesting breadcrumbs. Back in 2020, the DoD implemented a strategy called the Software Acquisition Pathway. The purpose of the SWP is to provide for efficient and effective acquisition, development, integration, and timely delivery of secure software. According to media outlet Breaking Defense, Hegseth has proposed doubling down on the SWP strategy as the Pentagon overhauls its budgets, and Palantir could be a major beneficiary of this initiative. It's been reported that one of the goals of this initiative is to identify areas within the budget that are deemed non-essential to military operations and relocate those dollars towards defense protocols. For this reason alone, I think that the sell-off in Palantir stock is overly pronounced, as there isn't any evidence that the Pentagon is looking to part ways with the company. Now, of course, something that is not mentioned here is the fact that Palantir's PE ratio is extremely high. I think it's roughly about 450. And considering this, and considering just how volatile the market is at the minute, the likes of Palantir with such a high PE ratio is always going to be hit with criticism about its valuation. Now, this is just something to keep in mind. This is not mentioned in the article, but this is one of the criticisms that is leveled at Palantir every single month. Now, one of the lesser known product offerings at Palantir platform called FedStart. This is a tool that helps companies achieve necessary accreditation standards required to deploy software within federal environments more efficiently. FedStart could be a major catalyst for the SWP process, meaning that Palantir could be in a position to witness surging demand over the next several years as the DoD refines its budget. If anything, Palantir's existing relationship with the military could be deemed a valuable asset, giving the company a launchpad to expand its infrastructure across the defense sector and accelerate growth. Now, the author says here that savvy investors may want to consider buying the dip in Palantir stock right now. But although I am bullish on Palantir, and I do think, just look at the growth of this company, I do think it's nowhere near finished. In the current environment, this could drop a bit further. But guys, what do you think? Leave a comment below and let me know your price target. Remember that I'm not a financial advisor and this is not financial advice, so I highly recommend you do more due diligence. But do you think the Palantir will go up or down from here? And just how much more do you think the overall stock market will fall during this correction? Drop a comment and I'll catch you.